We should be live. Great. All right. So let's go and have a look and see what's going on. So this here, let's go all the way out to our monthly. Okay. So we understand that the market, i.e. this Forex market, I'll turn myself up here. This Forex market here has been bullish. Okay. It's been making higher highs and it's been making higher lows. Okay. We can all see that. And if we drop down here, if my background music is too loud, please do let me know. It should be background. Shouldn't be something that's interfering with my audio. It should be background music. Now, we can see here that the market's been trading within this blue range. All right, that's the bigger range that I've put in here, this blue range. Now, we are currently, I'd say, near, 40%, 50% in the middle of that range, which is a bit of a concern. Okay, we can see over here there was some liquidity above this previous high over here that the market's just pushed past that level. All right, and I'm expecting, as I discussed the other day, to see some sort of retracement at least into 50% of this impulse. Okay, so maybe down into, into these levels. Now the issue is this: I don't know whether or not this is finished pushing up yet. I don't know. It could push up to over here and then decide to retrace 50%. All right, into that where that green line is. I don't know. That's the point. I don't know. But I'm anticipating some sort of retracement, some sort of correction after breaking not only above this high, but above this swing high all the way over here. I'm expecting some sort of pull back into this level. Why? Because that's how the markets move. Okay. If you look at all other times, have a look how the markets, this was some structural level. When it broke that structural level, it retraces. When it breaks the structural level, it retraces. The markets move in waves every single time. All right. When levels are broken, especially in line with the market structure and price action, we understand how the markets may move. So out here, my concern is that we might get a little retracement, but we're kind of in the middle of this range where this market could decide to keep going up and up and up and up. I don't know what it's on for 2024. Who knows? All right. Who knows? Let's drop our time frame down to our daily. So on our daily, we can see some nice structure of this previous bullish impulse. Look how it's making higher highs and higher lows and higher highs and higher lows and higher highs. Let me get rid of this for now. All right, higher highs and higher lows. All right, and in here, we identified that it created some huge monthly imbalance. Okay, 2 big monthly imbalances, and within those monthly imbalances, there's some weekly imbalances. And within those weekly imbalances, there's 4-hour imbalance. Within those 4 hours, there's 1 hour. Ultimately, there's some imbalance. All right, there is definitely some imbalance in here. And we spoke about the fact that the market at the moment, if we see from 2020, from Christmas Day, was kind of going sideways. I hope this is all coming back to you and you can recall us talking about, and this is important. This is important in regards to, say, for example, if you're doing your journaling, and this journaling is something we haven't spoken about extensively, and it's something that is important. Now, journaling, in my opinion, just means being accountable for your trades and being able to document, why, what happened and what you did. It just gives you a little bit more. And you know what I think journaling is good for? All right, which you probably never heard before, but I'm going to say it. It's for slowing you down. Okay. Now, what do I mean by that? I mean that when you have to, after every shot, you have to, after every kill. So imagine that you was, I'm not going to say the word kill. It's not very, like after every shot that you take as a policeman and you discharge your gun, you have to fill out a document. Let's imagine that you have to fill out a document of why you took that round, why you took that shot. You know what that does? It slows you down. It lets you know that you can't just start letting off your gun like a lunatic, because there's a load of paperwork that you're gonna have to do before you can squeeze your gun again. Okay, so it makes you think to yourself, every shot is you're gonna think about it. You're gonna give it that thought process every shot. Yeah, and when you do actually take a shot, you're gonna give it the respect to understand, was that the right decision? Did you take the right decision? Did you stick to your protocols? Did you did you make sure that the coast was clear? Did you make sure that there was no children around? Whatever it may be, whatever that process is, that's what I think what journaling is good for. But right now here, if you can see this here, Let's put some lines in. Because today is, let's go back to Monday. So Monday here, all right, we're gonna put a little line on Monday. But you can say this market is ultimately going sideways. And remember, we put some blue lines in. We put some blue lines over here and a blue line over here, which was liquidity. All right, liquidity. And then this yellow line was the previous high that the market came and pushed above it and then started going sideways. Really, I could get rid of this level here. I'll thin it out. It doesn't need to be that thick. Okay, like that. Okay, let's zoom in a little bit. On a 4-hour time frame, we can see how this market was going sideways in here. Boom, 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 boom. And we spoke about buying from the bottom of the range and selling from the top of a range. And over here, if you can recall, last week, we saw, look, Thursday, Friday, look at this big push. Happened all the way up here for 600-700 pips, all the way up into this level. And we've actually now captured the liquidity that was sitting above this level. All right, the liquidity has been captured above that level. Nam. All right, now let me get rid of some stuff, clean these things out. Get rid of those. Just trying to make it clean for your benefit. So the question is, what is this market doing at the moment, and what are we going to do about what it's doing? Okay, Monday's been cleared out, and today is Tuesday, and it's trading day, it's action time, and we've seen the markets make higher highs and higher lows and higher highs, a little higher low in here, okay, and then a little higher high over here. Now the question is this market now ready to run in the opposite direction? Okay, is it ready to break down in here, come and close some of these imbalances? Is that going to continue? Going to continue coming all the way down here? So what I'm going to identify is in that consolidation level, this range here, this consolidation range, I would really like to know where slap bang 50% is of that consolidation range. All right, so slap bang 50% of that consolidation range here. Maybe swallowed my tongue. All right, is here. That little yellow line is 50%. All right. So let me double click here. Let me make it a solid. Now, why is that relevant? It's relevant to me because I want to know, is this market going to stay above when it does start kicking back? Is it going to stay above that 50% level, or is it going to break down below that 50% level? Because for me, that gives me a real indication of whether the bulls or the bears have control. All right. Now imagine this was like a conversation that was happening. Should we go up? Should we go down? Should we go up? Should we go down? And then if I see it, we go up here and we come back down into this level, and then decide we're going to come down here, we wasn't really too serious about going up. If we come back down to this level, then we start seeing this market breaking back up here. It means that, you know, to be honest, the buyers were more serious about getting this pushing past this level. At the moment, that conversation isn't a foregone conclusion, because this could just be a liquidity grab before we start our journey in this direction. All right. So on a 4-hour time frame, the market's been making higher highs and higher lows and higher highs. A big push over here. Okay. Let me drop down to my hour and get some more clarity. All right. So with my hour, if I have to draw some lines once again, make some better lines in here. You know, I'd try and get this line. Actually, let me leave this one here. Okay, no problem with leaving that one. That acceleration that we can see here, this is how I draw the line. Now, someone's asking, Jay, why would you draw the line like that? Because I'm identifying the last high, the highest point, the last low, sorry, for the highest point. That's what I want my line to touch. Yeah, the last low before that highest point. Okay, so I don't need to put the top end of the channel in, but either way like that. So we can say the market came to that high point here, then it came all the way down to this low point in here, and then the market is doing the hokey cokey. So right now, for all purposes, the market is trading within that range. Now, what I am doing and what I've done so far is not brain surgery. It's breaking down the charts. If you find anything that I've done currently difficult to be able to get to this, draw these kind of squares and these type of, obviously you might not draw stuff exactly the same as me, but to understand that the market at the moment, The market at the moment, after pushing up here, is now going sideways. If you can't understand that, if you can't be able to draw these boxes, if you're not going to make it on a smaller time frame, we're going to be able to block up this consolidation even some more. All right. So if we go to our 15-minute time frame, we can see how narrow this is getting. Now, let me tell you something. When markets get narrow, it normally means that they're winding up for a big move. Let me say that one more time. When markets, especially your indice markets, get narrow like this, it's like all of that pressure is building up for a big move. Now, upon me saying that, I want to see what factors may influence, may inspire, may, shroud, may disguise the fact that this market wants to do something explosive. Let's have a look. Today there's not too much happening in the US 30 market, or on this calendar anyway, not as red folder news. So let me check orange folder on medium news. All right. See what I'm doing here, guys? I have a filter on. And we have some API crude oil stock change. Yeah. Apart from that, nothing too dramatic. Wednesday, we've got lots of red folder GBP news, it looks like, and we've got some red folder PMI stuff, and so that's tomorrow. Okay. All right. So right here, I'm going to be looking at a couple of things. Ultimately, I want to know when this market breaks outside of this orange block. Okay. The larger orange block. So I'm going to add an alert crossing down. I'm also going to add an alert if the market decides to break up for some reason and cross outside of that orange block. I also want to know on a smaller time frame when this market breaks outside this smaller orange block, just so I can start paying attention from them. All right, so I'm putting in my alerts. Can you see my alerts are my eyes and ears in the markets? So I cannot, this is where bots are very good. All right, when you have a bot is taught how to do its job, and it just does its job. Stays there, it's never going to miss it. It's taught that to listen out for this. And when it happens, it does something. We don't do that as humans. We end up going to the bathroom, end up doing something else, and before you know it, this trade that we wanted to sell it, when we look back at it, it's all the way down here in hell for 400 pips, and we're like, oh my gosh, I wanted to sell it, but I missed it. But your alerts are what going to keep an eye on what's happening in the markets, because somebody here is concerned about missing trades. Somebody here doesn't know, every time they turn their back, their trade disappears. And they go, oh yeah, I was marking this up and I said it was going to go down and it went down. Well, that's good. That's good for your ego, but it doesn't help your bank balance. All right. So what helps your bank balance is being able to make sure you can get in on those trades. And that means that, have a look here. Let me show you something. When you do your alerts, there's a few different options that you have in here. Okay. So you, as well as telling the market, its conditions of what market, when you want it to be crossing up, crossing down, less than, greater than, I just normally, put crossing up or crossing down. Yeah. But you can have it in whatever you want to do. As well as saying you want it to trigger once, or you want it to trigger every time it does that action, as well as giving it a name so that it's ordered, okay, and a message that you can write in there, when it crosses here, this is what I want to do, and blah, 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 blah. Remember to put my stop loss above the swing high. Remember to check news. Whatever you want to put in here as a description, is that on your notifications, you have a multitude of ways in which this notification can notify you. It can notify you in the app. Now, the app is something that you can download on your phone, and you should all have NT5 or NT4, depending on what your poison is, on your mobile phone. If you don't, you're slipping. Yeah, it says show in a pop-up. Yes, these notifications do also pop up. When you hear them ringing, they pop up on the screen over here. Send an email. Now, one thing I will say to yourself about this, guys, is you may want to create a new email address for your trading notifications. Because if you do put a lot of alerts in, all of a sudden you'll find your emails absolutely overrun with trading view alerts. Yeah, and then you'll start getting numb to them, like you don't care about them. Whereas if you have a separate email address, or you make sure that every session you delete all your other alert notifications and put them in, maybe they're gonna be more relevant to you. All right, and obviously you can play sound. Make sure it's playing the right sound, whatever sound you want to hear. You want to hear this sound. You want to hear this sound. You have all of these sounds, yeah? Whichever one resonates with you is the one you're going to use. All right. And it also allows you to send email to SMS if you're able to set up that function. And there's information there of how you can go and set up that function. But the point I'm making to you is that your notifications are a deadly tool in your arsenal, because you are not going to be always able to keep an eye on what's going on here. And when you decide to sit in front of your computer, that doesn't mean that that's the time you're supposed to be trading. And this is very difficult for humans to grasp. That when you're sitting in front of your computer now, you sat down, you made yourself a nice wine, yeah? You've even got a little crackers out, yeah? Taking off your shoes, put on your toasty slippers, kicked up your foot, you even got a little blanket that you put on your legs. And you're like, yep, I'm gonna trade now. But just because you've decided to trade now doesn't mean that the market's ready for you to trade. And you might go and look at that market and be like, oh, well, you're supposed to be able to analyze that market and go, there's nothing there for me to trade. But you place your alerts when possibly something might be happening, when you want to have a look. Your alerts, like I'm going to say to you again, are your eyes and ears in the markets. Now, how do you manage your alerts from TradingView? Can you see in here the little alarm? All right. What we can do in here is we can go in here, watch, use our options. These are our options of our notifications. Now, I'm going through this, and for somebody here, they know all this, but for somebody, they don't. All right. And this is what I'm saying to you, is about, if we're turning around and saying this is a skill that we're learning, a profession, it's one thing you know how to turn the saw on, or do you know how to change the saw's angle? Because it's going to come to a point when you're doing your job, you need to change that saw's angle. Do you know what to do? Do you know what tool that you need to loosen the gate to make it a different angle? Because if you don't, then you can't consider yourself as a carpenter. Because it's going to come to a point where you need to change the angle. So how can your customer's going to look at you like, all right, change the angle then. And you're like, well, I don't know. Well, then you're not a carpenter, bro. You've just been taught how to use the saw in one setting. You don't really know how to use your tools. So here are all of your notifications. And in here, in all of these notifications, you have the ability to stop them, activate them, remove them. Now, when it gets ridiculous, where you haven't cleared them out for some time, as you can see, I do Breakfast Club every morning, setting up notifications as I'm just teaching. You want to start again. So I have no problem with doing this. And remove. You can have remove all inactive, which is cool. Or I'm going to remove everything. And it's going to say, you sure, mate? Yes. Get rid of everything. So that includes the alerts I just put in here. Now you can see everything's empty. So when I put back my alerts, watch, I right click, I add an alert on. I want it crossing up. I want an alert there. I right click. I add an alert on US 30. I want this one crossing down. I want one here. I right click. I add an alert. I have one crossing up. You can see them added. All right. You can see, so that's where I'm going to manage my trades from. I'm only looking at US 30 so far. So those are the 4 alerts that I have in here. All right. And I can manage them from here, turn them off, mute them, etc., etc., etc. These are your alerts panel. Understand how to use this panel. All right. There is another panel here that I'm just going to alert you to. 2 more panels. One is your watch list. Now, guys, we are going to go through and do a whole session. It's part of our course of how you build a watch list. Okay. So this watch list, you can build multiple watch lists. I have 7 wise men. I have the Asian session. I have the big boys. I have the Harry Potter list. I have stock investment watch lists. I have stocks. I have 10 sell setups. I have today list. And they're all probably not that relevant at the moment. Well, some of them will be fine. So when I say big boys, we have some of the pairs that move the most in a list. You know, obviously your golds, your US 30s, your NASs, your DAXs, your Bitcoins, of pairs that move. And I put them in a little list called big boys. Yeah. So the whole point is building this list. What does it mean? It means that when you're looking through the markets, you don't have to start going in here all the time and wondering what's going on. You can go to your list, for argument's sake. Let's just go into our 7 wise men, all right? For whatever reason, we create this list. And then, you can just click through them. You can also, from seeing in that list here, you can see what markets are active. Have a look. Remember the same way that I was talking about how we could use this. Have a look. CNBC or Dow 30. The same way I said that we can use this as a visual representation. Like having a look at that, especially when we see. Let's have a look in here. But we do have some big boys in here. We have some big boys in here which are at the top of the list, bearish. But we can see that the US 30 predominantly at the moment is bullish. You know, it's predominantly heavily bullish. Okay. Now markets haven't opened. New York hasn't opened today yet, and this is the US 30. So it's interesting in what's going to happen when New York opens. Okay. But ultimately, based upon previous and what's happening so far, we've seen that this whole, market yesterday was green. Let's have a look at our US 30, USD. Here it is. And if we go to let's just say our hour, and let's go back to, this is Tuesday from here, and Monday started over here. This is where Monday started, over here, and we can see by Monday it was a bullish day. Let's go to our daily candle. Yeah, have a look at the candle yesterday. Candle yesterday was a big green candle. Yeah, big green candle. All right, market actually closed outside of the high of yesterday, and that is one confluence that sometimes means that the next candle is also going to be a bullish candle, a green candle. All right, but we have to take that into consideration of other factors also. All right, understanding that this is the high of yesterday, and this is the low. Okay, at the moment we're trading within that. The candle opened within the range of the candle. Didn't open outside the range of the candle. All right, so that is not showing us that this candle is going to be green. That's not a sign for us to discount this. Sorry guys, can't get my words out. This is the sign. It's not a sign showing us that potentially we're going to have another bullish day. Now, what do I mean by that? We did a whole little education for a good few days of the high and the low of the previous day. Yeah, you can see this previous candle opened outside the high of yesterday, the day previous. All right. It kind of gives an indication that possibly that this candle is going to be a bullish day also. All right. However, we are going to trade what we see, because we cannot take any one thing as the sole factor for us to be entering a trade. We have to build up our confluences, especially if we are day traders and we're taking trades on a smaller time frame. We want to be able to see what's happening on a smaller time frame and make our decisions. At the moment, this market is bullish. Let me make sure you understand. Don't think that JT in the market is bearish. It's not. It's making higher highs and higher lows and higher highs and higher lows and higher highs. All right. But we're saying to ourselves that maybe even if this market, we have to be wary of this market deciding after pushing above these liquidity levels of making a higher low, because that higher low on the US 30, for argument's sake, trading from where we currently are back down into these imbalances, is 500 pips. And even if it came all the way down here, it could still close back up here as a bullish candle. So we have to be aware of that, and therefore that's why we trade what we see. All right, that's why some traders only trade at the point after markets open. All right, now you're gonna hear some traders say that they do that, some traders don't. Some traders trade, before markets open, pre-market. Okay, as in New York. So I'm just saying to you right now, as we're doing our analysis and we're looking at the markets, is that I've now got my 4 little indicator soldiers with binoculars up on a mountain watching what's going on here. I do not want to get involved in this. I don't know what this wants to do at the moment. I can see that the price has broken outside of this blue market because this was the last low before this highest point. Price has broken outside of it, but now we're kind of sitting still within this yellow mark. It kind of broken outside of it a little bit based upon how I've drawn it, if I've drawn it decent. Maybe I could draw it better. Could maybe look a bit more like that. Touching this data point, the lowest point here, and this data point here. We're kind of, on the brink of breaking outside of that yellow angle. Can you see? If I was to put both of them there. Oops. If I was to put the top end, that would be the top end. Yeah, we're kind of sitting right there at the bottom. So the concern is that we're at the bottom of a range here, which is buy territory. But is the market breaking outside of that range to try and come down and close up some of these imbalances? Well, I don't know. And that's why I've got my alerts in there waiting to see. All right, let's go to another pair. I've really gone in depth there. And I spoke to you about this tab, which is our watch list that you can start to build. Okay. I also spoke to you about this tab, which is our alerts tab. The next tab I'm going to speak to you about is just this tab here, which is a list of all of your drawing tools. Now, why is this relevant? Is that you might be in a scenario where you just want to hide some, so you can use these eyes to hide them so they're not visible, but you don't want to delete them, so you can go back in here and put them back on. You can also, which is a really interesting thing here, is you can group these into folders. Now, if you was doing some real analysis from Sunday, you might want to make let me show you. You might want to make your charts really, really neat. I think maybe that's what I need to start doing, because my charts can be all type of ugly. All right. So, for example, I'm going to delete everything off this chart. In fact, let me do it on a new pair. All right. What pair should we look at? Is there any particular pair someone wants to look at? Is there any particular pair somebody wants to look at? Liberty look. If not, I'm going to just pick one. Let's go to BTC USD. All right. Someone was telling me about Bitcoin and I said, boy, I haven't even looked at it. All right. So let's go and have a look at Bitcoin. I'm going to delete everything off Bitcoin. And what you can do is when you're doing your analysis, because remember, you don't have to keep doing this. I keep doing this every single morning for educational purposes. You don't have to keep doing it over and over and over and over again. All right. So this market was trading like this. This was an angle once upon a time. Okay. I'm going to put in another angle like this, connecting this data point and this data point. Previously, I connected this data point and this data point. All right. And I'm going to take this and make a copy of it, snap it right on the top here. All right. This is for all the Bitcoin enthusiasts, the cult of Bitcoin that says Bitcoin's going to 100,000 and plus. All right. Maybe it's because of this range that they've picked out. Okay. Maybe. I don't know what's in their brain. All right. But what I can do, have a look. You see these lines that I just put in here? What you're able to do is watch. Why can't I create a folder? Let's have a look. What is this? Oh, I don't know why I can't create a folder because I'm right clicking here. It's not allowing me to. Oh, here we go. Yeah, so there you go. So let me say, for example, this and this. I hold my control key and I've selected both of them. And if I wanted to, I can just put them in a folder, as you've seen I've done here. And I can say, overall, I don't know. For example. Now, why is that good? Because obviously you're not necessarily somebody who has to keep doing this every single day. But now when you don't want to see that, they're in the folder. You can get rid of it. Okay? And therefore you can mark up Bitcoin once perfectly in however way you define perfect. Put all of your little lines in different folders with different colors and whatever it may be that makes sense to you. Have fun with it. Learn how to use this tool. And I know for somebody here, the features of Jay's getting real basic today, but I'm telling you, all of these things, the better use of your tools is going to make you a better trader. Like you might be an amazing carpenter, but when somebody comes in and goes, you can use this tool, on the side as well. You didn't know that. You were doing some madness to get the results on the site. And you didn't realize you just had to flick this and do that and do this, and then you can use the tool on its side. Okay? So it's very important that, like I said to you, you understand that you should be a master of TradingView and MetaTrader 5. Or MetaTrader 4, whichever one you're using. You should be a master. It's your tool. You should understand what everything, even if you don't use everything, you should understand what everything does and how it does it. And if you do not know, well, then that's your task. That's your homework. Learn what everything does. Go on your MetaTrader 5 and click everything. One by one, click everything and see what they do. See what they say. Go to the options. Go to everything. Have a look. All right. So Bitcoin. So say for argument's sake, we can see Bitcoin here. Yeah, it was trading within this orange range, and then boom, it accelerated. All right, this might have been all the talk. Now this is December now. Boom, we've seen an acceleration pushing up here. Now, why have I put this yellow line in? Why? Because I'm identifying the last low. It's about here, to be fair. Look at that wick. Before that highest point over here. All right, so I'm going to actually so that I can see the general energy, because I like to see what the general energy of the market is. I don't want to just see that some random wick, because that random wick is a random wick. Could have been an incident, a news incident that happened. Yeah, a freak. So over here, we can see the market was pushing up here, making higher highs and higher lows, and then something changed on the 12th of January, because the market started to break structure bearishly. As you recall me saying at some point that this market coming down, because I said, look, it accelerated outside of the range, which is this orange range, and we're seeing it breaking structure. And now where is structure? Last low before the high. Structure, structure, structure. We've not only broken a few of them, we've closed below a few of them. We even made a retracement back into this level and even closed down below over here. Now, yes, there is some imbalances still sitting over here on the 4 hour. Let me get rid of this, sorry. Anyway, some imbalances sitting in here on a 4 hour. On a daily, we're seeing there's some daily imbalance in here also. Okay, all a concern, meaning after we break some structure, if we saw it running all the way back up here into these imbalances, we'd understand why. Yeah, but on a smaller time frame, we can see how this market has been breaking, and the daily was quite nice. In fact, let me leave on a daily. All right, you can see how this market has been breaking some structure here, broke this structure, made a retracement. Didn't quite close down below, because look where the wick is over here. Here it closed down below. For all purposes, someone might have turned around and been like, here's my entry. Oops. Here's my entry with my stop above that last high over here. Only concern I would say is this imbalance that sits above it, but it's a little bit too large in my opinion to include it. So if you did decide to do that, here would be fine. You'd be about 1-to-1 right now. But the question you'd be asking yourself is, where is this going? You know, where is this? When you're going to get into a trade, you have to understand where might that trade be going. And the only way you have any opinion about that is by looking at structure. Now over here, we can see was a structural level. The level where the market couldn't break, then broke. You understand what I'm saying? Yeah. And we've got these little tiny bits of structure as we go in here also. You know, in here also is some structure. We might see some little reaction. Then we can continue to see some levels in here. You can see this is a level of previous level. Now on a larger time frame, we're going to eliminate a lot of those smaller levels, i.e. those smaller little retracements that we might get if this market continues being bearish. All right. We're going to eliminate that, and the ones that stick out for me is this one here. Now the question is, Jay, why does this one stick out for you? Why? Because it's the low after that last high over here, this highest point. Right? The market, if I was drawing this out with some lines, this market did this from somewhere down in here up to here, this wick here, and then came down to this point here, and then made this motion over here. Yeah, I could turn and say it made this motion, then this motion, then this motion, then this motion, then, even another little one somewhere in there, and then this motion. Yes, that would be also correct. But either way, the key ones, the major ones, the ones that are the real structural ones, would be from wherever it was, from down here to up to here to down here to up to here. Yeah, there is minor structure in here for sure. Yeah, because I'm on a daily. There's smaller structure here for sure that will still have reactions. There will still be demand there, unfilled orders sitting in those levels. But for me, that one sticks out. Now, this market is rolling, but I also believe that unless something dramatic happens in the world, this market's not just going to tank. Yeah, it's more than likely going to move in waves. Yeah, it's going to more than likely move in waves as it continues moving down here. All right, so let's look at this right now. This Bitcoin has broken structure and has been pushing down here like so. I'm trying to see where the energy is of that move. All right, we've seen the energy like this in this kind of angle. All right, if we're going to take this wick into consideration, then this market looks good to push all the way down in here. It looks good to continue pushing in here. Yeah. If we drop our time frame down so we can get more detail, we can see a little sub trend. If I do this with this line, kind of in here, market came and traded up here, bounced here, traded up here. Are we gonna have a little bounce from in here? That's just saying to me that if I do get into any trade right now, so say for example here on a 4-hour time frame, have a look. The market broke this structure here. Indication, let me show you the indication, just in case you don't know. This was some structure here, the market broke that indication, correction, continuation on a 4-hour time frame. So if I didn't get into the trade over there and I was thinking about getting into the trade, but right now, when that 4-hour candle closes, which is in 2.5 hours, then this would be a confirmation this market continue going down. But the only concern is I'd want to be putting my stop at least outside of this range that is trading down within. Yeah, because ultimately right here, we're kind of near the bottom of this little first impulse of a wave. Now we could obviously, this trend I'm talking about, see this little yellow range in here, we're kind of at the bottom of that range. But ultimately on the bigger picture, if we're taking into consideration this wick all the way down here, maybe this wants to push all the way down to the bottom of this range. So it's just about me getting in. If I get in like this with a tiny little stop loss, I've got to understand, wait a minute, I've got a real possibility that this market might tap this little yellow line and kick back up into here and stop me out. You understand what I'm saying? So if I'm going to take that trade, I need to make sure that my stop is outside of that possibility that the market taps here, comes back up into here, and then starts coming down here. Ideally, I'd want to be in here for the sell, at the top of the range, or here for the sell, at the top of the range, or here for the sell, at the top of the range. I don't really want to be in a sell here or here, which is where we currently are. Ideally, I don't, because it goes against the whole point of we are selling in the premium and we are buying, when things are discounted. Okay, I hope you understand what I just said. Okay, as much as I can see this breaker structure and I can see this indication, correction, continuation on a bigger picture, if I do get into that trade, I have to make sure that I'm safe. I've got to make sure that I am safe, as in this here stop is in a place that is going to be safe. And it might look like a big zone, but it's better you have a big zone and you come out profitable. You get down to here for a lovely 1 to 1.5, 1 to 2 trade, then you just lose your monies. Yeah, you don't want to just lose your money for lose sake. Okay, cool. On a smaller time frame, going down to an hour, as mentioned, I'd be looking at this and I'd be just watching it and thinking to myself, I'd like to get in here for the sell, but we're just a little bit at the bottom of the range. And I wouldn't want to be caught in a retracement back up to this top end, So maybe we could place an alert here to alert you if that market kicks back up, or if the market starts to accelerate in this direction, meaning breaking outside of this little range, starts accelerating, well, then you might decide to take a continuation trade, managing risk, when the market's got real bearish pressure and trying to come down here. At the moment, I don't know that. All right. So we're going to get rid of these yellow lines because they don't serve me personally. like so. And I'm gonna have my alert in. I've got an alert in above this level. If it starts to kick back, like I said to you, remember, the market could decide to come down here and then just start kicking back like this. You know, it doesn't have to kick back like that, spike all the way back up to this level. It's just trading within that trend. Look what it did before. Look, prime example. Look, came down here, came up here, and just trickled until it touched a little level and then decided to go. You know? And remember, these lines on the screen are just guides. They're not to the millimeter. They are just guides of when we start to see breaks and structure. For example, in this market here, let me show you as a back test. If I was watching this here we're looking at Bitcoin. I'm on the hour time frame. It's come up here and then it's just started to do the hokey cokey. Okay, it's just started to do the hokey cokey in here. I don't know what it's going to go and do, but definitely when it comes over here and it's now touching this trend line, at the point when boom, structure is broken outside of there, we drop my time frame down. Look, the market broke outside of that orange block. Indication of what it wants to do. Retracement or correction. Close back down below. That has told me, that has given me my signals, my strategy to understand, especially let's look at the time. That's what happened in early hours of the morning. All right, that's giving me my indication of what I want to do. And I'm either going to make a decision to get in very aggressively above this last high, which realistically there's no imbalances above. There's no real clear imbalances on the 50-minute time frame, reasons for it to kick back up in here. All right, let me go on the hour and have a look. No real reasons for it to kick back on me over here. No. So if I took that more aggressive entry above this last high, understandable. And if I did, I'd be laughing my head off. We just got some news come up here. Coinbase slams US Treasuries news, new crypto mixing rules. I don't know what, we're gonna have to do some more research into that, okay? But have a look, can you see our strategy? Indication, correction, continuation. Look at that, yippee-ki-yay. Now, whether you would have stayed in here for all of these retracements or something else, but this is a massive trade. No, 1 to 10. Okay, massive trade in crypto. And it makes sense, why? Because we're at the top of a range. It makes sense, why? Because we waited for it to break out the side of consolidation, indication, correction, continuation. Now, if you understand just this play, this is a play. So you don't understand. This is a play. You can call this something. We're gonna call it something. Yeah? This is a play that you can just constantly look out for this. Let's go and look out for, let's go and see if we can find it again. Let's go see if we can find it again. At least don't see if we can find it again. And we can definitely, I'm trying to find just 10 out of 10 ones, but there's loads of them I just went past. Let's try and find, see if we can find some 10 out of 10 ones. But let's go here for arguments. It's not great, but I'm just trying to find some 10 out of 10 ones. You know, we're looking in here, this market's come down here, it's made a higher high, and then it's ever so slightly coming down, but it's still kind of like hokey cokey and in between here and here. There's a bigger range here and here, and just ever so slightly is trading within then. Have a look at the trade. You ready for it? Same strategy. Wait for it. We're waiting for it to break outside of these lows. All right. I'm gonna drop down. Let me put a line in this. In fact, let me put the date in here so I don't lose it. It's 12th. It's Friday the 12th of January at 3:30. All right. So it's the 12th of January at 3. That would do. Is it 2024? Yes. Okay, so watch, have a look. We're seeing this little hokey cokey. All right, let me make it a different color because we've got lots of orange. Let's make it green. I'll drop my time frame down to a 5-minute time frame. You're allowed to be on your 5-minute time frame, guys. We're waiting for a break outside of that hokey cokey indication. And then what comes next? Somebody sing it out loud to me because this is what's going to make you rich. What are we waiting for next? What are we waiting for next after we get that lovely indication? Somebody knows. Correction. This is the correction. At the time, we don't know whether this is going to correct and push up deeper or not, but it corrected perfectly, because what did it do? What did it do that was so perfect? What did it do that was so perfect? Somebody knows? Guys, I want you to be more vocal. Let me know that you're here, that you understand. Somebody knows. What did it do that was so perfect?
Close the imbalance.
Close the imbalance. Yeah, there was an imbalance that formed in here. And this is the indication that created an imbalance. And then the market came and said, we want to go down. But before we go down, let me quickly, I just forgot my phone. Let me quickly run back. And let me go collect my phone. Yeah, I've got my phone. I've collected my phone. Thank you very much. Now I'm going to go about my business. And at the point when that candle went and closed like that, have a look. On a 5-minute time frame, you could have said, yep, Jay, I decided to get in. I'm going to stop above here. I couldn't see any more reasons for it to go above this level. Okay. You wanted to just take that little consideration here, that little tiny sliver of imbalance in here. Cool, no problem. You entered like that. And then have a look. Zoom out. Let's hit play. Would you be happy with that trade? I'd be happy with that trade. It fell out the window. It went to hell. Yeah, went to hell. You're just laughing your head off, watching your money just run up like seconds on the clock. And I'm saying to you, we can do this all day long. And this is how you can backtest. Remember, this is also in line with market structure, because we took a sell from where? From the top of the range. It wasn't selling from down here. It wasn't buying from up here. You understand what I'm saying? That's why this only happens every so often when the setup is available. Let me go to another pair, random. Pick a random pair real quickly, guys. Any random pair, let's go look for it again. Pick a random pair, let's go look for it again.
Gold.
Go on.
Gold, please.
What did you say? Say again.
Gold.
I don't know. It sounds like somebody's tied you up and put you in the back of a van.
I'm in the gym, sorry.
Go on.
XAU gold, please.
Gold, yeah?
Yes, please.
Gold, all right? And gold's a different kind of beast, but let's go and see if we can go and see what we're looking for in gold. All right, XAU USD. All right, now, first and foremost, I'm going to wipe everything off our charts. Clean. All right, let's go to our daily. Let's have a look. So we want to understand the market structure and what the market's been doing, which direction it's going, what's happening. So obviously, we can see the market's doing something like this. Okay, as a bigger energy, like so. We can put in some other little smaller lines so the market's, doing this. Maybe as a smaller little something that's going on in here. Get down to our daily, have a look, see what's going on, understand what's happening. All right, so look, for example, in here, I'm on the daily, but I'm just showing because I can't be able to go down to minutes and seconds. All right, so look. We're looking for what we look for. If I drop it to my phone, I'm focused. My eye's focused on here. Why is my eye focused on here? Because it's at the bottom of a range. On the bottom of a range, I'm interested in buying. All right. So the bottom of the range, I'm interested in buying. Okay. And I'm interested when I'm seeing this market come down here. I'm on a 4-hour time frame. Have a look. Now, I think it's pretty clear that the market was going down here, making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Then it started to make equal lows, sorry. All right. And within there's two little blocks. I'll mark both of them up. There's this little range in here. You really want to go all the way to the top of this range? Could do. All right. But I'm going to get even smaller than that. Yeah, there's this little area here where the market's ultimately in trading within this area, they're making equal lows. It's no longer making lower lows. So to me, this direction of it falling down, something's changing now. Why ain't we keep going down here, down the steps? Why are you doing the two-step backwards and forwards on the same step over here? All right, now on a smaller level, have a look here. That market starts doing the hokey cokey in here also. Can you see? And even here on the 4-hour time frame, I want to drop down to my hour. Oh, should have put the date in. 1 second, I should have put the date in. I'm a mug. Let's go and have a look where we are. Oh, we're over here. It's the 13th of October 2022. Okay. So even here on our 4-hour time frame, which I want to drop down, 13th of October 2022, 13th, 10th, 22. I didn't see what time it was. Either way, it's better than nothing. All right. Look, if I drop down to my hour time frame, and then I'll press this. Great. Look, I'm looking at this box first and foremost. Have a look. Indication was what I'm looking for first. Indication. Yeah. Then we're getting some sort of correction that came down and it tapped into this little 50% of the little imbalance that's in here. There's another imbalance below it, but it didn't want to go down there because it's got its own mind. All right. And then we can see the correction that absolutely blasted past this high, to be fair. On the 1-hour time frame, I can't see that candle closing. So I'll have to drop my time frame down some more. Let me just try and do that. Hopefully it gives me the data. Let's go 15 minutes. Let's go here, hopefully. Fingers crossed. No, it didn't give me the data. Let's go half an hour. It's going to give me the data, twice as many. Yeah, let's go half an hour. Hopefully we can see it. This is going back to 2022, guys. All right, let's have a look. Indicated, corrected. Still didn't quite give us that candle closure above here. Now look, to be fair, as soon as this market starts to break structure over here, retrace and close back above, you could have taken an entry over here off of the basis of this trajectory coming down here and seeing the market break this level, this structural level in here, retrace and close back above. Now I know what you're saying. Say, but Jay, it did it over here. It didn't do it over here. Because look, here was structure. The market broke, retraced, did not close back above this level. It whipped above this level and then came back down here. And then that created some more structure in here. And on a smaller level here, which I'm saying smaller level, but it's actually half an hour, which is quite big. The market did close above here. This is a closure above these wicks. This is a retracement, and this here are closures. Well, that's a closure over here above all of those wicks. So even in that instance, our strategy plays out. And you could either put your stop below that last low very aggressively or below this swing low to stay safe. And then boom, explosion. Yeah? Have a look at the bigger blue box. The bigger blue box that we drew is exactly the same. Yeah, it's exactly the same. That market I said was going sideways from about that little blue box. Have a look. Indication on a bigger picture. Indication where it wants to go. Correction. Closing back above here over here. Let's go and hit the button over here on a much bigger picture. This is what when I was looking at on the 4-hour daily, or even way I'm just showing you. Look, indication, correction all the way down to this level, which is a lovely structural level of where the market couldn't break before. It's the battlefield. Remember the battlefield over here with the dead bodies? Brenda saying, let's go back and check to say if everybody's dead or we haven't left our own guys. It came back down here on the battlefield. Yeah, and then watch, boom, have a look. You'd be happy with that trade. Yeah, you'd be happy with that trade if you was in it on a larger time frame. You're not going to be on the larger time frame taking 4-hour or daily candles. You're not. I'm just showing you that same setup every single time. If you want me to drop down, let's drop down. Make it more relevant. All right, make it more relevant here. This market is bullish. I'm going to do this. Why here, Jay? You know, why here? Well, I'm looking at this big, massive push up here as the highest point. This is the lowest point of this highest point before the highest point, okay? What the market was in here. Now, let's look at it from, I'm gonna go down here. I'm gonna use that as a more relevant point. All right here. I'm gonna drop down to a smaller time frame, 15-minute time frame. Have a look. Market's making lower lows, lower highs, lower lows, lower highs. It's going downstairs. Like if you can't see this going downstairs here, then you know you clean the cataract. Go and sort that out. All right. But when it got down here, the market started to kind of do some funny stuff. It's kind of like it came up here. So I'm gonna zoom in to here. Remember, I'm doing this on the fly, guys. Believe me, trust me. Here's one I made earlier. All right. The market was market was doing this, some smaller consolidation, but also on a larger time frame was kind of in here. These two boxes. I'm doing two boxes. All right. Okay. So let's go and see what's going on in this smaller little situation here. I'm going to drop down to my 5-minute time frame. Let me make this a different color as well. This one in here, make it a slightly different color so you can see it better. And now this one I'm going to finish with, guys. All right. In here. Okay. Let's drop down to our 5-minute time frame. Where is it? Where is it? All right, yeah. Here you go. All right. So on a 5-minute time frame, have a look. We seen this wick push down here. This could have been an indication of where it wanted to go to, but it didn't close. It didn't retrace back in here to correct. It didn't close down below. This looks more like what, guys? That little wick. What does it look more like? What term would we give that little wick? What term would we give that little push?
A liquidity grab.
A liquidity grab, meaning that it's got a journey to go on. And before I go on that journey, I need super malts. I need some rum cake in there. Give me 2 nutriments. Yeah. I need some bandages, a sweater. I need some provisions before I make my journey. Yeah. Liquidity grab room. Now, if I drop my time frame all the way down to the 1 minute, you will see some other stuff. But even from here, watch. Big massive break and closure outside of this level. Indication. Before, maybe this could have been an indication, but it went zoop, zoop. Indication. Liquidity grab indication. Then we saw a correction coming back down here. Then we saw a closure back above here. Look, by all means, you could have turned and been like, Jay, I'm getting in here with my stop below these lows over here. I am concerned about this imbalance, but it's your decision whether you want to make your zone like that, taking into consideration that imbalance, or you want to be aggressive below that last low. But have a look. Space. Went to space. There's no point me even pulling this out. It kept going and going and going and going and going. Okay. Now I'm going to drop down to the 1 minute time frame just to show you a smaller entry. Okay. To show you that in every time frame it's just fractal. So this is Tuesday the 14th of November. So this is 14th. This is November. And what time is that? It's 1. Let's just say 1:30. Okay, let's put there. Left. Oops. I think I've made a mistake somewhere. Must be 2023. Yeah. All right. Drop down to my 1 minute time frame. Have a look on the 1 minute. It's not giving me the 1 minute data because it's bad mind. Right, let's go to 2 minutes. Yeah, let's go see what's happening on the 2 minute. Don't know if 2 minutes is going to give it to me because it wasn't very visible at the 5 minutes. So it's not giving me the data, unfortunately, guys. I was going to show you a lovely 1 minute entry. Let's look to here. But I got the wrong timing. Maybe I got the wrong date. Let's just check. No, I don't. It's not giving me the data. All right. But I was saying that they could have been a smaller little entry in here on a very small time. Either way, doesn't matter. All right. That's the playbook all day long. Looking at that consolidation and waiting. And if that is the only thing that you remember and you understand and you really get it, then just look for that. How do you trade? That's it. I trade one playbook, one play. That's all I look for. I understand which way the market structure is, where it's going. I want to take trades, buys when it's cheap, sells when it's expensive. Yeah. and I wait to see a break, an indication, a correction, and a continuation, then I enter the trade. That's it. That could be you. You don't have to have 20 different styles. No, you're a boxer and you punch up people in boxing. Can you kick? No. You know, I'd love to see a Deontay Wilder throw some kicks with them little pencil legs. He cannot kick. He's not into kicking. Kicking's not his thing. Yeah? He's a boxer. And he's made a successful living making a ton load of money throwing punches, not kicks. And you can do the same thing. Yeah? You can do the exact same thing. I was trying to find another quick example for you guys, but I think we had enough examples. All right? Guys, any questions? Any questions about anything? All right? Look for here. I can't help myself because my eyes are just drawn to it. We can see how this market, this orange, draw your eye to the orange band. Okay? The orange band is this bullish energy that's been happening, making higher highs and higher lows and higher highs. At the bottom of that range over here, we can clearly see the market not making any lower lows and lower highs. The market in this little area of sideways action. Yeah, it's not even probably the best example to be fair. All right. Let me drop my time frame down. Shouldn't be too bad. All right, and even here we can see that it didn't go to space, actually came back down, but it doesn't matter, you can still take it into consideration. So this isn't the best example. The market was going sideways in here. This whole green box is sideways action. All right, and in this instance, looking at this from a 1 hour perspective, you would have either got break even or lost this trade. All right, because this range here is not great consolidations. It's kind of a big range. I'd like to see a nice solid consolidation, like little choppy range, like going sideways. Either way here, we can look at it if we want to. It's not a problem. I'll just look at it on a 4 hour. Oh, let's see what I'll do. We'll look at it here. So we can see here, boom, indication of where it wants to go. Correction came all the way back down here. Now my concern is this correction is how it pushed all the way back down here past these imbalance levels. All right, shows me still very volatile. Just GJ still doing the most. Indication corrected here, but didn't close that back down below this swing level here. Why would that be the swing level? Because I was drawing in my trend lines. This would be the low before the highest point. Look, if I was drawing that in as some kind of, it would look like that. You feel me? All right. So this was the indication. The correction's fine to come all the way down here. Came to like the 618 kind of retracement level, and then boom and close back above here. Now in this instance, if you said, you know what, yeah, I'm going to get in that trade, and you executed here, if you're stopped below that low, okay, or below the last low, which would be the last swing level here, you would see that market very quickly, as you got to up here, started to break structure against you. Break, retracement, close. To be perfectly, for all purposes, at this point in time, you might have said, you know what, it's not looking great. Because the market is breaking structure against you. And this is how, when you get a bit more advanced, you can limit your risks. So when I start seeing the market start to break structure, where is structure? Let me move this out of the way. Where is structure? This is last structure here. We're seeing structure, Yeah? I see the market start to break structure against me before I've made a single pound. Well, I might as well cut my losses. I might as well say, you know, let me get out of this trade right now. It's not doing what I thought it was going to do. I wasn't expecting it to start breaking this structure. Especially, you know, this market starts getting down to these levels. And as you can see, the market wasn't done going sideways. So this green box really should have been like a bigger box. At the time, you don't know that. You know, at the time, you don't know that. But the market's still kind of doing the hokey cokey in here. Yeah, so like I said, you can only go by the information that you have. Just look at it now. We're saying that this is the type of range it's been trading within. Once again, let's go back to our strategy. I'm waiting for an indication of where it wants to go. The indication closing up above here. Some sort of retracement that doesn't break the previous structure. yeah, of this market. So if I was to do this, how this market is coming up in here, have a look. Indication, correction, it doesn't break the previous structure, closure back above. Now in this instance, even if you put your stop below that last little low over here, this swing low here, okay, of this impulse, this yellow line, then that was the one. That's the one that stuck. That's the one that stuck. Yeah, that's the one that stuck. And there you go. Is what it is. This is a bit more of a choppy market. Didn't like what was going on in here. But ultimately, this market was kind of just chopping around. You want to be looking at this going, oh yeah, look how bullish this looks, or look how bearish this looks. No, it's just chopping around a bit, innit? Breaking structure to the upside, breaking structure to the downside. It's a bit of a mess. But even there, you saw, okay, we could have mitigated our losses. And then when we've decided that it's actually breaking outside of this choppy structure, above some structural levels over here, indication, correction, continuation, we could get in, we'd have been profitable, we'd have got back our losses or whatever it may be over here, and we'd have been laughing. Even if we took it over to here, that is a 1 to 5. Yeah, and there's no reason why we would have been out of this trade here, because look at the difference. Look at the difference between that trade and the other one, what I said over here, yeah? Is here, you never see this market breaking structure, retracing and closing back down again below. Never. It hasn't happened here, look. Even once, it doesn't retrace and break it again. Nowhere it does it. Nowhere it does it. All the way to up here until break, retracement, close down below. By all purposes, you're out, mate. I'm out. Taking my profits at a 1 to 4. Might as well say 5. You want to round up, and I'm happy. Every time, guys. Don't tell me I'm making this thing simple for you. I'm giving you the playbook, guys. Good morning. God bless. We run over a little bit. I'm going to play something that's inspirational, motivational, something that we can learn from. I'm not going to play a podcast. I think I'm going to play something else about a slightly different topic. I'm just looking. Looking. Something that's going to be, you know, ooh, didn't know that. Never heard of that before. We're going to play something about it's coming. I don't want to play any stuff about the war. I know what we're going to play. We're going to play something about some health. All right. So I was talking to somebody earlier who was telling me that they've got issues. They're constantly constipated, can't go to the toilet, etc. And they're having real problems, man. You know, they can't go to the toilet. I know for me, guys, toilet is one of life's many pleasures. Sitting in the toilet, and I'm regular. I'm like clockwork. But imagine that you are not regular and how uncomfortable you are, etc. So we're gonna play some education, some in regards to health, and I'm gonna wish you guys to have an absolutely fantastic morning. Go for your potential. Hopefully we learned something this morning, and maybe you're gonna go around looking for those plays, looking for the playbook, looking for when it's break consolidation to see it make an indication for it to correct, especially if you're in the right place in market structure, not especially, or like really only when you're in the right place in market structure, buying when it's cheap, selling when it's expensive, okay, in line with the overall market direction. You know, that's really what we want to see. But guys, for the people that are at home as well as able to watch this, hopefully you learned something. Sorry about my rambling halfway through the session. I couldn't get my words out, but like, share.